So a marginal close on the local bourse today, and the big movers on the day, I think, were industrials. I think the JSE closed with them just under 1% in the green. But we've got Chantal Marx from FNB Wealth and Investments who's going to be unpacking those figures for us. Chantal, as always, thank you for your time this afternoon. And let's start with the overall markets. Yesterday we saw a marginal close in the red. Today a marginal close in the green. But globally we are seeing that there's a lot of upbeat sentiment given the US earnings that are coming out. Tech stocks, I think, was one that we were looking out for today.
Yes, yesterday was the proverbial running out of steam day on the market. It actually started out quite nicely and then ran out of steam as the day progressed. And today was almost the exact mirror image. The market was trending lower for most of the day, and then at 4 o'clock we started seeing a really nice rally. This coincided with the US Open, and I think that there's general optimism there that earnings have been better than expected and that the underlying economy could be in better shape than what was feared in September when we saw a bit of a sell-off in equity markets. I must say, and I must add, that this is on very thin volumes. There's a lot of risk still in the air, and that is reflected in volumes. When conviction is high, volumes are high, and when conviction is low, volumes tend to be quite thin, and that is the case both on the JSE and in international markets.
Right, let's get into some company statements that were released earlier today. I'll start with Baldwin Property. They're indicating that they are really benefiting from this steady increasing demand for apartments. People capitalizing on the current interest rates, and the likes of Baldwin are cashing in on that.
Yes, they said specifically 1- and 2-bedroom apartments fared especially well. And that is typically the area of the market where you find first-time home buyers. And I reckon that low interest rates and interest rates that have been low for a while and could be lowish still, I mean, we could start seeing increases soon, but it won't shoot the lights out, have allowed a lot of first-time buyers to enter the market. And the Baldwin proposition, I think, is quite solid. It's a very neat setup. It's very safe. You've got beautiful finishes. It's generally in really good areas. And that really plays perfectly in the hands of that first-time buyer who finally has the ability to borrow money to buy their first home. I think 80% of their apartments sold were 1- and 2-bedroom units. And the company reckons that there's still a lot where that came from.
Right, I really want to talk about Pick n Pay, and I'm going to squeeze inflation in here too because they're relatable here, Chantal. So we are seeing that Pick n Pay did feel the effects of the violent unrest that happened in July, but also consumers are going to start to feel the impact of increasing operational costs, especially with inflation coming in at around 6.5% today, much higher than what was anticipated.
Yeah, so food inflation was quite high. It actually did moderate a little bit. Food inflation was about 6.6%. It moderated from 6.9% in August. This is now the September inflation print. But there are some very specific reasons why food prices have been going up. And we've actually seen that on a month-on-month basis, food prices have finally started to subside because meat prices are finally coming down. Sweets, however, are going up. Probably will be a good thing for all of our waistlines if we avoid buying sweets in future. But I think that the bigger issue from an input cost perspective for Pick n Pay and for consumers generally is going to be this big spike that we're seeing in transportation costs, the fuel price continuing to climb amid very high oil prices that don't seem to be that we can't see abating in the very near term. I think at some point you'll have to see some sort of a supply response in the energy market, and then hopefully we'll see it subside. But we could see this push through in terms of price increases of goods and services generally, but I think it's going to especially hurt on the food side.
That's right. And I mean, the only good thing you did say there was the fact that higher cost of sweets makes us buy them a little bit less, which means a smaller waistline. Chantal Marx from FNB Wealth and Investments, many thanks for your time this evening.